Good evening, everyone. Today is Monday, November 4th, 2024. Our goal here is to review the market generated information in a holistic fashion. We're intimately following the auctions narrative of both ESN and Q. If we have time, we'll theorize and add additional commentary towards the end. We do have a uploaded recording of the market today. Check it out. Cool. So, where is the market coming from and what is price attempting to accomplish? We do have a very busy week, with tomorrow being the start of the election coverage and FOMC being Thursday and not Wednesday. And we cannot forget the PMI and the ISM is tomorrow as well. Take a quick look at that. Today we had the factory orders. And this week, again, we're going to have a bit of news. Wednesday, nothing at all. And we can't forget about earnings. I don't know the exact impact or the weight of all these, but it's something you want to keep an eye on. So yeah, just something to pay attention to. But again, tomorrow is the start of the election. Unconfirmed when the results will come out. So again, the market is bracing for this uncertainty. And I think it's important to understand where we came from. Again, we just finished our month from last week. We're still within that bar. And looking at the weekly candle, you can see that we had lower highs and lower lows for 2 weeks now. And we close under the 5 SMA for the weekly. And of course, we've been well below it. 3 days, 4 days, 5. How many days is this closes below? 1, 2, 3, 4, 5, 6, 7, 8. 8 days below the 5 SMA. So it's important. So again, we are definitely seeing more of a bearish sentiment. Bulls have control on the highest time frame. The intermediate, this is still very much bullish, as we are just pulling back to that former breakout period here. But I think it'd be unfair to say that the buyers have control over the daily and the overall sentiment. So I'm not exactly sure how we're going to approach the narrative here, but sellers are definitely in control. They may not be closing below their Thursday candle, but they are definitely bear flagging and having lower highs and lower lows the entire time. So again, solid job for them. But really their goal for the sellers was to make lower highs and lower lows, and the buyers, they really just need to get back into this half point of this candle, because we're not really seeing much. If they can get back into the half of this candle, that'll put them somewhere near here in regards to the prior structure, but it's just, it's just not happening. And we'll look at the monthly candle for the NQ. Again, the same situation there, except they're not as bearish as the S&P 500. And then looking on the weekly, really about the same situation there. They're not closing beneath this range. We can see that they're still dealing with this consolidation. Let me zoom out just a little bit. So again, while they may never have hit the all-time highs, they're still doing fairly well within the recent and relative structure. And they too wanted to get back above this halfway point, because if they can get above this halfway point of this candle, that'll put them over a fair amount of structure. Okay. So again, we're at the situation now where both sides can see opportunity. Clearly, buyers are performing well here, and sellers for everything that we just talked about. So it's really whoever wants to take position, now's your time to kind of show out. So now we can look at the MGI, market generated information, and we can see that the volume has still been increasing as we've been seeing. Again, this is October. You can see the volume at the very bottom just getting lighter as we got into the middle of October. And then as we got towards the end, volume started to pick up a bit, and really very much so once we got below the 5 SMA. And then this anchor VWAP here is from the former for the all-time highs candle. So you can see we're well below after that gap down, and then a push to that lower point. And again, we're just bear flagging still. Everything we just talked about. Buyers had control at first, pushing almost near 4K max for the Delta, and we ended up sellers ended up taking over early in the session. Buyers pushed it back up, and sellers finished, ending with the negative 3,700. So again, solid job for the sellers. We have 52 points of range. The buyers, as you can see, all up in here, and even towards this area near the mid 50s, closing with the price under them. So again, poor positioning for the buyers, and we have sellers from the prior day, from Friday, still in favorable position, even with the buyers on Thursday from last week still getting lower in their profit, and now they're starting to be a bit negative. So if there are still buyers within this Thursday's candle and Friday, which had a high delta, as you can see the max got up to 11K. We talked about this on Friday. This is we can definitely have a move, a nice liquidation lower once we break these 24s, if that is broken. If that is broken. And I also wanted to mention, sorry, this one's going to be a little longer. Again, the buyers really want to protect these 24s, which they definitely did today. So I mean, we'll see if we can get a little more context. What happened? Okay, so that was the ES. Quick note again, and we already talked about the delta, and then the 1.26 for the volume. Looking at the NQ, increase of volume as well. So it's above average. We are same thing with the sellers, and then the buyers took over and the sellers pushed it back down. We still ended slightly positive, basically unchanged, with 236 points of range. Essentially, this is just a compression candle, and you have these three lows here. So I mean, this is look out below, look out below. So definitely, it's a good chance there are going to be some stops there. We have the sector tracker. Sorry, that's my journal. This was me today. I traded like shit. So yeah. So we have the S&P 500 that finished negative 30 basis points, negative 28 to be exact, with the leaders being energy, which is one of the weaker ones, consumer staples. So these two together is definitely more of a defensive stance, especially with industrials, ideally utilities, but utilities sold off, as well as financials and healthcare. Healthcare, we're not surprised because healthcare has been weak over the past, X amount of time, especially over the past month. But again, we really want to see the finance really hold strong on days like this. But solid job for technology for them to be essentially unchanged, finishing slightly negative. But again, materials and real estate and energy and consumer staples, this isn't enough to keep the market up. We did well today with the market only being down negative 30 basis points because technology kept their shit together. If technology were selling off, this would be a completely different story for today. So again, solid job for technology, and that's what we've been seeing recently. Since technology is doing so well, let's actually start with them for the market profile. We have our composite that goes back to April of this year, and we can see we are dead smack in the middle of this VPOC area, which is the 220K 200s, which is exactly where we pushed up into today. We pushed up. We ended up going to 20K 250, so right about that half point. And that's exactly what this zone is, just showing. This really just needs to be purple. I don't know why I don't have this as purple. I may need to zoom out and see, because I already have another purple there. That makes sense. All right, we'll finish that another time. I'm not gonna worry about it. But again, this is just the VPOC zone that we have. You can see we ended up pushing up, and then really just kind of just building volume around this area. Sorry, it's not the easiest to do this with the NQ, just how many points they have. But again, this is that VPOC zone, and we're essentially just sitting right in between that high point and this low point in this zone. So it's just a crap load of volume. And again, this zone goes back to April. This is the composite of the volume from 20K 60s to 20K 50s. So again, this 200 points of range here is going to be really important. So we're just really compressing whether we shoot above, that may be a bit of a violent move, and then even shooting below may be a violent move as well. Honestly, if we break this zone here, this 1,000 points of range all the way down to these 19,000s, it isn't really unexpected. This is a lot of volume here, and it's going to be a cannon if we push to one side and then that's sustained. But we also want to look and be careful to ensure that it's not a look below and then fail, because then that same move will be violent to the upside as well. It's a lot of energy. It's a lot of energy, and it's starting to be a little bit uncomfortable. I'm not sure what to make of this, to be honest. But okay, we'll do the S&P 500. So their same situation. Their VPOC zone is here near the 5700s, and then really the 5600s as well. They've done a good job, very uniform. 56, 57, and then the 58s are up here. Notice it's not as much volume here for the 58s. We have our Friday candle, and then our composite that goes back to the April. Hold on, let me mute this mic. Sorry about that. It's a siren. All right, so we'll zoom back in. Oh, my apologies. So again, so we may not be at the 5600 right here. This area, this yellow here is the value area high for this composite, and that's the 5770s. So if they can really push back above the 5770s, they may have a bit of excursion, a little more thin space, not as much turbulence. But really, this is just like a big valley here, and then this valley is from the 5750s down to, let's call it good here, it's 5720s. And again, those 20s is where we have that ledge where there's probably going to be some stops. So the 5720s can take you to the 5700s pretty quickly, just given the stops. And we'll actually see if we can look at this, because we might as well. Should be pretty simple to see. Those 20s are right there. So like once all these breaks, that can be pretty interesting. I'll actually, let me hide these drawings, and you can see. So once all these breaks, you definitely want to look out. So that same thin space area is pretty much in here. Once you break those, you'll kind of find yourself cascading down to the 5700s, which is about right there. So this through here is about 20 points. So where we are, we opened up with a little small gap down, and we finished. We opened up somewhere about in this range, the 5750s, 60s. We ended up pushing a little lower, pushed back up. We ended up hitting that value area high, those 70s, the 73s, and they pushed up to the 76. And then we collapsed back down to this same zone that we're at. And again, this zone is just where those 20s are, and this is a low volume node within this composite. So again, not much action is happening relative to last week's candle. Excuse me, not last week's, but this was Thursday. Wednesday, Thursday. So yeah, Thursday, Friday actually. So yeah, the sell off, then push up, and then the fill. So again, we're really just kind of just moving sideways. Couldn't even get over that hump from there. Okay. Sorry, this one was a lot more in depth. So we won't belabor this because we just went over this. It'll be a little clearer to see with candles. So again, if the S&P 500 breaks this, look out. There's no real structure here. It's kind of just going down. And that'll essentially take you to the 5700s. And again, to the upside, they have a little more work to go against them, but it's not as thin structure. But you do have a lot of overhead supply. So essentially, what this red area is. So that's also October's a high volume node. So not only that, but they have to push through the 58s, push through this high volume node, and then push through all these people who have been stuck holding. If they're still stuck holding long, they're going to be really eager to get out, and that's what this red line is here. And then you just have another high volume node up there before you head to those all-time highs. So with the election, really anything can happen, but we just want to really just go through exactly where we are. Okay, again, we just talked about that on profile. Same thing here for the NQ. Notice there are three days Lows 1, 2, and 3. So again, we want to see if that's going to be broken. What else do we have? And essentially, that's it. Yeah, if they break those, we may find our way back down to these 19,000s, to these 800s. The 800 is essentially here. And again, it's just so much empty space down here. It's just they really need to be careful. And they're going to be coming in hot too. This is very aggressive. This is a very aggressive move. Bear flag, and then it may have like another liquidation lower. This can be pretty bad. And I'm more speaking more on this because of it seems that the narrative is changing from the bulls to the possible to the bears, from more buying to more uncertainty in selling. The market doesn't like uncertainty. Yeah, I mean, simple as that. Okay, so we opened up within range from the prior days while it was at the near the lows. We ended up pushing down. No volume really traded near the lows, and then they pushed up, and then sellers essentially just kind of capped it back down. Really not too much to speak of. It's more of a compression right here. Once we pushed lower, sellers tried, buyers really pushed it through, but then they stopped. And then we just floated sideways for the remainder of the day. Really not too much to talk about there. Even with the NQ, if we can look at these on a 15-minute actually. Actually, let's keep it on a 65 because we're already kind of pushing it. The sellers 100% were here at the beginning of the hour, and then the buyers pushed it through. But then once they pushed it through, they actually continued. They actually continued on the NQ. You can see that the max got up to almost 1500. But then the sellers finished. They finished at their minimum delta, which is just, it's interesting. So you see buyers kind of being stuck there. Sellers continued to push with the negative being almost negative 1300. Buyers pushed it back up, same time as the S&P 500. Tried to continue again. There is a big passive seller that was just up here clearly. And then they really just went sideways. Sellers really got a bit aggressive. Buyers gave up. And this was just all selling for the most part, with this buying delta really just being at the close, I'm assuming. Probably just shorts covering. Okay. All right, we'll look at our 3-minute candles. So there was the 7 a.m. factory orders data, and it wasn't too crazy of a response, but we will look at it because it kind of cuts through a lot of the noise from today. So again, we did have a gap down on the S&P 500. We closed at, let's call it 5760, and they reopened at 5740. So about a 20-point drop. For the NQ, it was about a 40-point drop for them as well, which isn't much, but they sold off initially, which essentially just equated to the same thing. And all that was in, I think, like 1 or 2 minutes at most. But anyways, so there was a gap down, and then after the gap down, what is a response? A trend up leg. Okay, cool. So where is price going exactly? So we have a trend up. The NQ is pushing through the prior day's range through Sunday. Retest the VWAP, and very aggressive, challenging the structure from the prior day's range in the RTH. What is this, near those 200s? Near the 250s. End up hitting the wall, tried one more time, sold out. They said, fuck it. They went back to the VWAP, kind of built volume a little lower, pushed through one more time. They started sticking to the VWAP, and now they're trading below the VWAP. I thought it was interesting. If you look at our recording, as soon as we started, they were already selling. It was the participants had already began like a little small sell leg into the open. So that was a bit of a precursor to the weakness that we'll see in the market. S&P 500, again, they had their gap down. They immediately started to buy, sold it off to under the VWAP one more time, and then other than that, they used the VWAP for their whole session. It wasn't until as we got closer to the RTH where people wanted to liquidate to start our session. And then we have our, let's get these back to back. Okay. I may just do like a copy. I'll figure that out later on. Okay, cool. So again, we had our 7 a.m. data. So we initially start off and we have essentially just a doji candle for the S&P 500. But for the NQ, we're like selling big time. Okay, cool. So this is a possible open drive, but like, where are we going? Their overnight low is very close. It looks like they're heading to their overnight low. So I mean, once they get their overnight low, they continue to sell through, close under. They have one more candle, and then the fourth candle brings them immediately back up through the overnight low and reclaim, push through, push all the way back to the open. Very aggressive. No sellers really here. Found some sellers. They kind of held this 5 smoothing average, and it really just began to have just like a trend leg above. They had their 7 a.m. data. Once they had that, they essentially didn't break that range, poked above a little bit, picked one side, broke through that range, and then no real retest until their trend leg fell. But we'll get back there in a moment. The S&P 500, a little similar, but they were showing a little more sturdiness. Same 3 candles down, same 3 candles up. Trend leg, once they had the one close below the 5 smoothing average, they had another one using the VWAP as support and able to reinitiate and resume that trend above the 5 smoothing average. They had their data as well, ended up compressing and coiling to the right, poking above that zone for a few times, but no real separation from that SOC high zone. We poked through, unable to reach the overnight high for both, which is a bit worrisome. And then they ended up closing back into the range for the S&P 500, back into that SOC high, beginning to trend below this 5 smoothing average, and there was no real support at all. They broke through the SOC high, no support, the initial balance high, the open, there was no higher highs, the initial balance mid, still no higher highs. We had a bit of a higher high here, but they closed and poked through the overnight low as well. Still no higher highs. Not until they started trading below their overnight low. So again, this is just more information for myself that as they're breaking through these levels, if we're not seeing a change of structure at these levels, we would assume that they're going to slowly go down these DGPs, these daily generated prices. So that's just important to myself. Once there began to be these higher highs, 1 and 2, they eventually ended up failing to break those 52, 57, 24s. They stopped right at the edge and they ended up closing above the 5 smoothing average. Cool. No real pullback, just straight upwards, straight grind. They reclaimed the initial balance low, no lower lows. Next area was the initial balance mid. They did have a lower low there, but you want to take this with a grain of salt as that's that initial reclaim. So I mean, I think that happened before anyways. And then they didn't run into issues until they started hitting the VWAP bands, the full session, and then the RTH. And then that's when they made their lower lows all the way back down to the initial balance low. And this is when people kind of just gave up. People kind of just stepped away just in general, but they essentially just two-way trading above the open and then above the initial balance low, thus creating they had their initial highs and then just lower highs for the remainder of the day. So I mean, this is just really just balance. Not real trading above, not much trading below. They ended up closing somewhere in the middle of the range for the day. NQ, really the same thing there. They had their break of the overnight low, everything we just kind of talked about. No real support at the SOC high. No real support at the open. Potential support here at the initial balance mid with the higher high. We have some green candles here, but they ended up making a new low there, thus creating their new trend here, stopping out a lot of these people, protecting this low for this impulse candle here, and then they resume their trend really just in the same situation as the ES, except they're above the initial balance mid, they're above the initial balance low. Yeah, really not too much to say there. They weren't able to stay above their SOC high on that second leg. So again, this is just something I really want to put through my head for myself. Just understanding, like, if we are going to pay attention to these DGPs, that we need to make sure that we're looking at our entries properly as well. Once they had this SOC data and we pushed above, oops, can you do? I just redo it. It's not a big deal. Sorry, I deleted. Yeah, God dang it. Once they push through, they continue just to stick to this SLC high. I mean, as soon as we had like a real nice impulse, we just did lower highs and lower lows until we got back into this zone. Whatever, it's not a big deal. We had the impulse candle here that was potentially going to take us back out of this range, and it never did. Here, we need to have some balls and just be able to get in and then risk that high. You had multiple opportunities for us to get in. Even if we did want to be a bit late, we could see that as they started to trend lower from this 5 smoothing average and you were at this open, we can see that any real attempts, even coming close to this 5 smoothing average, they ended up getting smoked. So, I mean, we had multiple opportunities to get in. It was a little cleaner on the NQ, which is just a little, I was a little more nervous to take this short there. But it was a little bit cleaner here as we were seeing the same situation here, and they were unable to make their new overnight high while the ES was sticking to their senior to crime high. Once we see these buyers being trapped and eventually being engulfed, their first real touch of this 5 smoothing average ended up being rejected. We had 2, 3 opportunities for us to get in here. We don't want to get in at the cheapest price. We want to get in at the best price. So if our theory is that once we get under the 5 smoothing average, I don't see why we're sitting on our hands when they are clearly trending below on the 1 minute. And once we push up, there's no activity above. We need to be selling anything above there because that's considered expensive. If we're going to have a real trend down, this you we're not making a higher high. We're not making a higher high, and we're unable to trade above the 5 smoothing average. We need to be looking at the DOM when this touches this, and really be looking and be ready to pounce, targeting these other DGPs. Just ride this shit down. So yeah, I'm just gonna leave it at that. A lot of good notes for myself. Again, the buyers have their work cut out for them. They are getting smoked right now in the overnight session already. The sellers did a good job. Sellers did a good job. We'll give these sellers a good 8 or 9, given the fact that they were able to keep them below the prior IB mid, which is still well below their IB low from that sell-off day on Thursday. Even when you look at the NQ, yeah, they were able to push past the prior day's high. So not as much for the technology. Buyers are still trying here. No, they're getting extremely dangerous. Look at the full session. They're getting extremely dangerous with this is the 15 minutes on the overnight session. I mean, we're really close to breaking all these. We're only like 40 points away, and like this can happen in 1 minute, to be honest. So it's actually 50 points away. 45 actually. So yeah, we'll give the buyers on the NQ some credit, but I mean as of right now, I think the sellers are doing a good job. Sellers will give them a 8 or 9 on the S&P 500, given the weakness from healthcare that we already know about, some weakness on financials who really needs to step up, they were able to mute the technology, and then like all the other little random ones, they were able to kind of take some hit off those. Communications, consumer discretionary, utilities got smoked today as well. So again, solid job for the sellers for the S&P 500. Not so much for technology. So it's just something for us to be aware of, be mindful of, and I'm curious. I'm curious if we're going to see these. Curious if we're going to see some overnight selling off. So yeah, please get your rest. We do have elections tomorrow. I don't know what to tell you about that, man. It's been my first time trading with the election. So y'all take care of yourself, and please use stops or have like daily loss limits or something. So yeah, good luck, man.